bring everyone in. Take it away, Jamie.
Great. Thanks so much, Dave. I just put a notice in the chat for all of you who have been returning E311 subscribers, or those of you who are new. If you wouldn't mind adding your name, your role, and your city to the chat, it really helps us, especially when we get to the Q&A and conversation, to be able to contextualize, to understand where folks are coming from, and be able to paint a broader picture. I'm Jamie Lavin, and on behalf of Bloomberg Philanthropies and the United States Conference of Mayors, wanted to welcome you all to this session of the Federal Assistance E311 program. This program was stood up to help cities that were responding to the negative impacts of the COVID-19 pandemic, and we've been supporting cities throughout in understanding the rules from the U.S. Department of Treasury around American Rescue Plan Act funds, including the SLFRF. As we all saw, the U.S. Treasury has provided some new guidance to cities, and we want to make sure that you all feel really well prepared to comply with this guidance and also to submit your project expenditure reports. And so we brought back the team from Widow Ryan, including Matt Hansen, who has been our go-to on understanding the rules from Treasury and how cities can make sure that they're well prepared, both to comply with those and to put these dollars into use on city priorities. And so with that, I'm going to turn it over to Matt to lead us in today's program. We've built in a lot of time for Q&A, and thank you for all of you, those who have pre-submitted questions. We'll make sure to get to those questions. And as Matt's going through today, please add any questions, comments, insights about how your city's handling anything he talks about to the chat. I know that cities really learn from each other, and so we'd love to hear how you all are internalizing this guidance and preparing for upcoming reports. And so with that, I'll turn it to you, Matt.
Thanks, Jamie, and thanks for the opportunity to speak with everyone today. As Jamie mentioned, we really want to build in as much time for question and answer and peer sharing as possible. Joining me today are two of my team members, Dan Petrelli and Ryan Vergara, who have been reporting superstars, living and breathing inside the Treasury portal. So hopefully there'll be great resources for you to answer any questions at the end. So just a couple agenda items. There's been a lot of activity out of Treasury. So I want to talk a little bit about the Treasury's compliance review, some implications and strategies, what we know about the current reporting period, and then open it up for Q&A. So next slide. So it's almost hard to keep up with everything right now, and Treasury is certainly doing its best to keep us on our toes. So on March 13th, they sent a initial notice of recoupment to many recipients. This went to a lot of the non-entitlement units, so smaller jurisdictions, targeting those jurisdictions that either had not reported last year, so April 30th of 2024, or also did not report full obligations on that report. It was took a lot of us by surprise because, they were acting on data that was, almost a year old at this point. Why not wait until the 4/30/25 report? But they still sent that notice of recoupment out. I think it really sent a message about what their end goal is, which is to claw back as much of this money as possible. On March 25th, they sent to all recipients a notice on compliance reviews and related recoupment efforts. And in this, a lot of significant takeaways, but one of the key ones I highlighted here on the slide is Treasury intends to vigorously monitor recipients' methods of obligating funds by the December 31st, 2024 deadline. Treasury is committed to recouping funds used in violation of SLFRF rules and guidance. This is a very different posture than Treasury had prior to 12/31/24, when they were adding additional flexibilities like the use of memorandums of agreement to meet obligation standards. This sends a very clear message that they're, where cities and towns trip up, they're going to take advantage of them tripping up and recoup as much funding as possible. In addition, in the notice, they talked about enhanced compliance checks to ensure funds used in accordance of program requirements. This is pretty ironic in that they were supposed to start doing ARPA monitoring around the time of the Super Bowl, but the day after the inauguration, they sent a notice saying that all their travel is canceled and P cards suspended. So instead of doing on-site monitoring, it seems like they're going to be doing a lot of data crunching, analysis, and desk reviews. And part of this, they talked about a new process, at least for the state and local fiscal recovery program, information document request. We'll discuss that a little bit on the next slide. But this is something that they've done on another ARPA program, the Capital Projects Fund, which is the broadband component of ARPA. In addition, kind of interesting to see this spelled out that blatantly in a notice, to all grantees, but Treasury to send financial instructions to return on obligated funds, et cetera, et cetera. Usually these are messages that are sent in kind of one-off communications to individual grantees. To send sort of a blanket notice about next steps is pretty unusual, and I think, in my opinion, really gives us a sense of Treasury's motivation and where their energies are going to be focused going forward. Next slide. So some things to think about. So key actions and considerations. A lot of folks are saying, I spent all my money in 2024, I spent all my money in 2023. Do I need to keep reporting? The answer is yes. Keep reporting. Even if there's no updates, keep recording. There is no process yet for marking a report as final to end your reporting responsibilities. So if you thought, the December report was your last one, or for an annual reporter, last year's April report was your last one, keep reporting until you, definitively have notice from Treasury that you no longer need to report. If you have missed any reports in the past, go back while it's fresh in your mind and document the reasons for any missing reports. Confusion on guidance, you didn't know if you needed to keep reporting, you were having technical issues, you reached out to the Treasury help desk, didn't get a response. Whatever the case might be, just make sure you have a good list of documented reasons if you missed any reports, because the way the Treasury portal works, you can't go back and submit those late reports now. So make sure you have the documented reasons. Review all your previous obligations. I know I sound like a broken record, but this is critically important. Many jurisdictions took advantage of the MOA to hit the 12/31/24. That's great. But MOAs were just a tool to meet the obligation deadline. It was not, the end of that programmatic implementation. You still were going to move forward with contracts, subawards, et cetera. Make sure you're not just sort of resting on that MOA that was done for Treasury purposes, but keep those projects moving forward, because I think we very much are on a ticking clock when it comes to utilization of these dollars. Revenue loss, for those of you that joined the Treasury, the sessions where Treasury officials were on, they talked about revenue loss being a multi-step process quite a bit. Just to reiterate, there's a difference between revenue loss from a reporting purpose and revenue loss from an implementation standpoint. So from a reporting, yes, you can show obligation and expenditure at the same time because you don't have subrecipient and vendor details. But that doesn't mean behind the scenes in your own files, you don't have to still have those details. So for those of you that just offset general fund expenses, make sure you go back and do a memo to file, or you document, you know, how those revenue loss funds were used. Even though you don't have to report it to Treasury, make sure you have it in your files. Because ultimately, in that information document request process, that's what Treasury is going to be requesting, is the actual proof of obligation, proof of expense, from your files, not from the reporting. I know there has been a lot of discussion about liquidation period, pointing back to the uniform guidance, having a 120-day liquidation period after 12/31/26. Treasury has never indicated that they're going to have a liquidation period. They have consistently said that 12/31/26 is the end of the expenditure period and the liquidation period. Until you hear differently, I would assume that 12/31/26 is the day to have everything fully expended and liquidated. What that means is that you really shouldn't have projects, subawards, contracts, etc., that go till 12/31/26. You really need to back those things up, to, you know, to give yourself that internal 90-day, 120-day liquidation period. So take a look at your projects, and make those adjustments now. Finally, the expenditure period, the 12/31/24 obligation date is in the ARPA legislation. It is hard coded in there. It's expenses incurred by 12/31/24. Treasury in the final rule interpreted that as obligation by 12/31/24. The 12/31/26 expenditure period is not in the legislation. It was a policy determination made by Treasury. And given everything we're seeing with federal financial assistance, I would take the 12/31/26 with a grain of salt. I don't want to create panic. I don't want people to rush expenditures, but really you should be looking at scenarios. You should be looking at ways to expedite your expenditures. We've had a couple clients lately that are just now starting, you know, small business grant programs. Now is not the time to be starting those kind of grant programs. They've gone out for RFP on infrastructure projects. The bids have come back extremely high, so they're doing value engineering and they're going to go out for another series of RFP. You really do not have that type of time right now to be rethinking how you're going to use money, how you're going to be deploying the money. So take that expenditure period very loosely, and really play through some internal scenarios about how you can expedite expenditure. Because with the current administration, for those of you at the local government level, you probably have not heard as much about the clawbacks of HHS funding, the clawbacks of Department of Education funding, what's happening with the FEMA BRIC program. Everything's on the table right now, and you need to be acting accordingly. Finally, on this slide, the information document request. This is actually in the Treasury portal. It's essentially a desk review, a monitoring process, where they will send you a sample and request certain pieces of information related to your report. This could be general ledger, it could be copies of expenditures, it could be invoices, all those things that you would normally submit as far as a formal monitoring visit from a federal grantor. That's what this information document request process is. So be warned that you might get a notice from Treasury requesting documents, and you'll be asked to upload them in the Treasury portal. Next slide. Thanks. So the actual 430 project and expenditure report, the report is available. What is not available right now is the actual project and expenditure report user guide. We refreshed the Treasury website numerous times throughout the day, and it's still listed as still forthcoming. We are not expecting major changes from the January report user guide, but there could be. So we're trying to navigate the reporting process the best we can based on available guidance, but just know that there could be some curveballs that are thrown at us at the 11th hour. The April release of the Treasury reporting portal has seen some significant technical glitches, especially for some annual reporters actually being blocked and not being able to initially submit the reports. Treasury has been actually really good about responding to those technical glitches, and they've fixed a lot of items. But if you run into something that doesn't seem right, that's stopping you from submitting your report, it's probably not a you issue. It's probably larger and impacting, multiple recipients. Please get that help desk ticket number, reach out to the help desk, get it documented in case the issue can't be resolved by the 4:30 deadline. This is a critical reporting data set for all recipient types. Certainly for quarterly reporters, it's important. And for annual reporters, this is the first time you'll be able to report obligations post 12/31/24. If I had to guess, Treasury is going to spend a lot of time looking at this data set, looking for recipients or classes of recipients who have not fully obligated, where there are large pots of unexpended funds. This will be the first complete data set they've had in a year. And I'm sure they're going to tear it apart pretty significantly. So make sure you take this data, this reporting period serious. It's important that you take them all serious, but this one I think is really a watershed moment, and make sure you put your time and energy into this April 30th report. Reporting data is cumulative, so you can still make edits to previously reported projects. There have been, certainly in the FAQs and the guidance, there are opportunities for you to move obligations around if a contract is canceled or cost overruns or that sort of thing. You can still make those changes in the reporting portal. You would do a negative transaction against one report and then a positive transaction to a new one. So don't think that your previously reported data cannot be updated or altered, because it can. Finally, Treasury is scheduling 2 upcoming webinars, just navigating the portal. If I had to guess, I would guess that they would have the project and expenditure report user guide out in advance of their webinar tomorrow. I think that would be awkward for them if they did a webinar and don't have the user guide out there, but we've seen stranger things. So definitely encourage folks to take advantage of these Treasury sessions as well. And with that, I will open it up for any questions folks have.
Great. Thank you so much, Matt. I think some of the questions that we might ask you've already covered, but sometimes it still helps for people to hear the question formalized. And thank you to Ryan and Dan, who've also been helping to triage the questions as they come in. The first one that was submitted was from Taunton, Massachusetts. Hopefully I'm pronouncing that right. And the question is there going to be any guidance on the use of program income earned after December 31st, 2024. 3 new fields appeared in the edit project window that weren't there for Q4 24. I think one of the team has this ready.
Yeah, I took on that one. And that one, a lot of these questions that we received are addressed in the final rule FAQ document. So specific to the program income, that's addressed in FAQ 17.21, which we can put a link in the chat to the final rule so everyone can access this. But you're correct that those are new data fields that appeared in the portal for this reporting cycle. And while Matt just said we don't have the April guidance yet, so I'm not sure if there's going to be any language that specifically addresses this. The FAQ states that recipients may add program income earned from SLFRF funds to their award. Such program income includes that which is earned between December 31st, 2024, the obligation deadline, and the end of the period of performance on December 31st, 2026, which is what those new fields are requesting. As with all award funds, such program income may only be used to cover an obligation that was incurred by December 31st, 2024. And that FAQ 17.21 does go into a little bit more detail about some other nuanced situations where you can use program income as well. So I would check out that FAQ for some more details.
And those questions are important because the program income has to increase the total award amount in order for you to show obligations. Otherwise, it would error out. So that's really what that's accomplishing. Please remember that interest earned is not program income on state and local fiscal recovery. So make sure you're only reporting, their definition of program income and not interest.
I'm glad that you mentioned that. We did get some questions about interest from Holyoke, Massachusetts, so down the road. Any updates on the use of interest earned from ARPA deposits? Any concern with interest clawback?
No, they've been consistent from the get-go that interest earned on deposits is not considered program funds, grant funds, and no. So use it as a general fund or however directed by your administration, and no concerns about clawback on the interest dollars.
I'm just going to maybe just put this in an even finer relief. We got a question from Glen Olden, Pennsylvania. How is the obligated amount and the interest earned processed? For example, if our expenses are $1 million and the interest earned is $50,000, would the obligated amount be $950,000?
So for that one, like Matt said, the interest money itself, when you're thinking about reporting in the Treasury portal, you only want to be thinking about your prime award amount. So the money that you originally received from Treasury. And so that interest amount isn't captured within what you submit to Treasury in the reporting portal. So if your prime award you initially received $1 million from Treasury, then you would be reporting against that $1 million only in the portal, and the maximum amount of expenditures and obligations you would be allowed to enter into the portal would be $1 million. So the $50,000 that you earned in interest would be almost separate from that prime award, and it wouldn't be accounted for in the Treasury reporting portal.
Great. And if you asked a question and we answer it and you're not fully clear, feel free to follow up in the chat and let us know if there's a clarification that's still needed. We got a question from our friends in Baltimore. Will errors in the Q4 24 PE reports constitute grounds for recoupment? What kinds of documentation will Treasury be seeking in the event of an audit?
No, I mean, I don't want to, in the environment we're in right now, I don't want to speak in absolutes at all, but no, errors in reporting should not be grounds for recoupment. It potentially will trigger that process where they request additional documentation that you'd have to upload them. What we've seen with some of the other programs is the documentation is very different and very specified by Treasury. So it might be an accounting general ledger. It might be copies of specific invoices. It might be an agreement with a particular vendor or subrecipient. So I can't give you an absolute list of the documentation required, except for those of you who have been monitored by federal grantor agencies before, think about what you've had to produce. You've had to produce invoices, payments, general ledger, grant agreements, etc. Those are all items that should be in your file, whether they're requested by Treasury or not.
And we obviously talked a lot in our sessions in November and December about interagency agreements. So make sure that you all have those also on file. Great. The next question was from East Sound, Washington, and it was asking how to amend a prior year's reporting to fully expend prior to the obligation deadline.
You can't alter a prior year report, but on the current report, you can show that project fully expended. The key was showing that project was fully obligated if you're a quarterly reporter by the January 31st report, or an annual reporter by the 4/30 report. But going back and increasing expenditures at this point on previously submitted reports is not an activity you can do.
Great.
And
okay.
let me just clarify, and that's different than what you have in your own files. So if you've gone back and done a ledger transfer, moving money from one project to another, moving expenses, having those expenses fully committed by 12/31/24 or any date, that's great, and that's what needs to be in your files. But as far as what you can put in the report to Treasury, you can't go back retroactively and alter those reports.
Great. We got a question from Paducah, Kentucky. What are the red flags they'll be looking for? What should we be concerned about if we have spent the money and completed our projects?
I think first and foremost, it's going to be where folks have not fully obligated. That's the first thing they're going to be looking at. I think the next thing they'll be looking at is large buckets of unexpended funds, not only with certain jurisdictions, but also classes of jurisdictions. If hypothetically, if every state is sitting on $500 million worth of unexpended funding, and they see $2.5 billion or whatever staring them in the face, that's something that's going to get their attention. The next thing I think they're going to be looking at is some specific projects that might not align with the current administration's goals and priorities. Not to say those are not allowable activities. Those are just activities that will be scrutinized. And that's why it's so important for you to have allowability assessments in your files, how you interpreted the guidance that was available at the time, whether it be the interim final rule or the final rule, to basically explain how you got to the decisions you got to. We've heard pickleball courts and things like that, and certainly DEIA projects and climate change projects. Those are projects that we know are going to get scrutinized more than others, and it's not to say they're going to be clawed back or determined to be unallowable. We just need to be prepared to have the story, have the justification to explain how we got to the point of funding those projects.
Thanks so much. And Ryan put into the chat the link to the compliance supplement to also help bolster just your understanding of the types of red flags the Treasury might be looking for. If you've put your question into the chat and we haven't gotten to it yet, don't worry. We have a running list, so don't feel like you need to put it in again. We have them all cataloged. The next question comes from Esben, Kansas. In terms of thinking about how to turn in a report when the money was all spent in 2023. I don't know if the person from Esben is on, just to give a little further clarification there.
I mean, if it's fully spent in 2023, that means it should have been reported as fully obligated and expended in April 24. You're literally going in and recertifying the report for 4/30/25 and hitting submit. There's no need necessarily to have any changes, but you do need to go through the steps of certifying and submitting the report. And part of this is compliance, but also they have added, as mentioned before, some additional fields. So you might have to go back and add detail to a project that you previously reported against, and there's now a new field asking for some additional piece of information.
We got a question from a city. I've mistakenly reported current period obligations for 3 reports in a row when it should have been reported only once. I cannot lock the projects. The total expenses are correct. Will this have any impact on the closeout process?
This is super common across a lot of recipients. I've seen this issue a ton, and I've reached out to Treasury about it, and they have said that they're not going to open up previous reports to correct that error. So you're unable to use the lock function if that's the case, because the lock function is looking at summing up all of the values you entered into those cumulative period fields, and when that exceeds the total budget, then Treasury, the logic of the portal doesn't want you to lock the project. So hopefully it won't have any impact on the closeout process. It doesn't stop you from submitting your report right now, so that's why I'm hopeful that it won't have an impact on the ability to close out. But that's just kind of a existing error in the portal that Treasury knows about, but we're just kind of stuck with how the portal functions for right now.
And like anything else, when you run into a situation like this, do a memo to file, document the error, the actions you took to to correct it, and just make sure you have that in your file going forward.
Great. We got a question from our friends further north in Boston. How should governments manage records to support the new attestation in the portal when a budget is changed or when a new project is created, that the obligation must have been in place by the December deadline?
And so that's also a new field with this this month's portal, and there's really just 2 requirements of that attestation. And like Matt just said, I think if you wanted to go the extra mile, you could make a memo for each reporting cycle that kind of is a historical archive of all of these changes that you make, and then ensure that you're in compliance with that language that you're attesting to when you create the new projects, that you incurred the obligation for the new project that you're adding by 12/31/24, and that you also have the proper documentation to support that.
And this is, just another sign of, what Treasury is trying to accomplish with their review. I mean, they've told us throughout the FAQs that there are situations where we can reobligate funding after 12, 2 projects created before 12/31/24. The attestation is just part of that process. So, whether you needed to attest to it in the reporting portal or not, you'd want to file a document in your file that says, this is why we moved money from this project to this project after 12/31/24. This was the Treasury FAQ guidance that we followed. There's the one scenario where 3 different conditions have to have been met. You'd want to document why those 3 conditions have been met, regardless of if it's for reporting purposes or not.
And maybe we'll stay on this topic for a moment. We got a question from Rockville, Colorado, that they originally had money obligated to a water project, and that project has not started. And they want to know whether they can apply the money to a previous water project that they have a loan on.
You can always go back and move money onto a project that was obligated before 12/31/24, whether your original intent was to use the state and local fiscal recovery fund dollars or not. You just want to make sure that, you have documentation that it was, obligated before 12/31/24, assuming a contract, signed with the vendor, but then also make sure that that project, met the other federal flow down requirements like procurement if necessary, and some of the other things. But if it meets all those conditions, then yeah, certainly go back and fund that project that's already underway. Again, I don't want to create, panic, but what we're seeing is, no cost extensions really don't matter right now. Project period end dates don't matter right now. So you really don't want to be, you know, really relying on that 12/31/26 project expenditure period end date. You want to try to be advancing these funds and expending as quickly as possible.
Great. We have a few questions about admin expenses from Lorraine, Ohio. If we obligated more admin dollars than we will be able to spend on administrative expenses, how do we go about adjusting this obligation?
Ryan, do you want to take this one?
Sure. Yeah. Like Matt said, you can always make changes. I'm trying to find the right FAQ to reference right now. It's in section 17, but basically if you have a project that comes in underneath what you initially had estimated for the budget, you are allowed to repurpose those funds to another SLFRF eligible expense, but that new expense that you would now be reporting underneath SLFRF must abide by all of the rules of the program, including that the costs were obligated prior to 12/31/24. So that's the biggest thing. Yes, it's a FAQ 17.19 is the one that kind of speaks to this concept. And it's titled, "After December 31st, 2024, may a recipient use SLFRF funds that were initially obligated but ultimately not expended for an eligible activity." So that'll give you a little bit more detail about this concept as a whole. But like I said, the biggest requirement or thing to keep in mind when you're going about making changes is any new project that you're going to be reporting to Treasury, for it to be compliant with the rules of the program, you have to be able to substantiate that those costs were obligated prior to 12/31/24.
And Ryan, from a practical perspective in the Treasury portal, you can do negative obligations and negative expenditures against existing projects.
To remove them, right? Mm-hmm.
Right. So if you budgeted $1 million for admin, created a project, and now you're only using 750,000, you can do a minus 250,000 transaction against both the obligation and expenditure, and move that money elsewhere. Otherwise, you're going to error out because it'll look as if you're over obligating or over expending your allocation.
Great, thank you. Maybe a similar question. How to apply funds to staff time after 2024? Is that something you would have needed to obligate ahead of 12/31/24?
There were a couple different approaches. There was the interagency agreement MOA approach, and then there was the cost estimation approach to Treasury. So, if that was the plan, if that was the intent, but for whatever reason it didn't get properly documented, make sure you go back and document it now. But in order to apply funding for staff positions going forward, it has to be tied back to one of those obligation methodologies.
Thank you. Next question. Maybe we'll take a softball here. We got a question about that Treasury doesn't accept mail. What do you usually advise cities on how to correspond with the Treasury?
Really, well, Ryan and Dan, I'll defer to you. I know what my experience is, but what has your experience been?
there's a couple of email addresses, and we can put them in the chat. But it's usually a pretty slow process in my experience to get a response from the emails. There is also a phone number, and I called them last week, and they picked up instantly and took my call and gave me a case number. So we can put those resources in the chat for you as far as reaching out to them and getting assistance. But for anything related to the required project submission and the compliance with the reporting requirements, it's all going to have to be done through the website. And any type of documentation requests, it's all going to have to be done through the Treasury reporting portal. So they specify in the documentation request explainer video that Matt mentioned earlier on that even emails won't suffice. It needs to be done through the portal, which is the official system of record. Yeah, that unfortunately there is really no paperwork option for that as far as compliance goes. It's all done digitally through the reporting portal.
And just as you know, in general with communications, make sure you get the ticket number and you keep the ticket number. So if you run into something that's preventing you from reporting, make sure you have that ticket number for your documentation. What we've heard anecdotally is the Office of Recovery Programs at Treasury is pretty much a skeleton crew right now. The folks I've interacted with have been, very helpful and trying to support us. There's just not enough of them. So, make sure you have the ticket number, make sure you have it documented for down the road in case you have to provide, justification of why you reported a certain way or didn't report because you were running into some sort of technical glitch.
Great. Next question from Everglade, Florida. When claiming revenue loss, do you need to have separate reports on how the money was spent? For example, part-time employee hired, maintenance to governmental buildings, etc.
From a Treasury perspective, you do not. They certainly would like individual revenue loss programs like part-time employees and building maintenance, but from a technical perspective, you don't. You can just have a single revenue loss provision of government services project in the portal. That being said, though, on the back end in your own documentation, you need to have records of how that money was allocated for down the road for monitoring purposes.
Given what we've heard about money being rescinded or clawed back in other programs, if we had a signed purchase order contract in place at the end of year 24, is there any risk of completing the purchase?
Yes. In the environment we're in right now, there's always a risk. I've been involved in federal grants, including as a director of grants policy for the Department of Justice. I've never seen a federal grantor agency rescind a no-cost extension and make a statement that said, well, you really shouldn't have relied on us for guidance, which is what recently just happened with the U.S. Department of Education when they pulled back all the COVID-related education funding. So given the environment we're in right now, I wouldn't take anything for granted. So if you have that purchase order, be talking to that supplier, be looking to, expedite that transaction. If it looks like that transaction is not going to happen, look at other previously obligated expenses and potentially move some things around. But I really, at this point, would not take 12/31/26 for granted and be looking at scenarios and how you can expedite your expenditures.
I think that probably answers the question we also got from San Leandro, California. Next question goes back to this lock project section. And I think maybe we've answered this, so team, keep me honest here. But from Kingston, I've had a lot of trouble working with the lock project section of the portal. There seems to be no way to make changes in prior entries for period obligations and period expenditures. All my cumulative obligations and expenditures are accurate and we're fully obligated, but the lock project section of the portal has been very difficult in amending errors and showing that we're actually fully obligated. Do you have any advice for this, maybe beyond what we've already discussed?
Don't worry about it, I guess, would be my advice. What's most important is in your project overview tab, what values you see at the top where it says total adopted budget, total obligations, and total expenditures. That's really the values that Treasury is looking at when they're looking at your obligations, not what appears when you're in the lock project screen. So it's unfortunate that the portal kind of locks you into what you submitted in those current period fields in previous reports. But like I said earlier, once the mistake is made, there's no way for us to fix it in the current portal environment. So I know it can be frustrating, but I think there's nothing we can do. And as long as you're comfortable with the value that's reflected at the top of the project overview tab underneath your total obligations, that's what's most important.
Great, thank you. We'll go to another question from Santa Fe, New Mexico. If a new obligation needs to be made with a different vendor, but the original obligation was approved before December 31st, 2024, can we still proceed as long as we have the documentation to support the original obligation?
Yes, as long as it meets the criteria set out by Treasury for switching to other vendors. And I refer you to the FAQ section that talks about it. There's 3 different FAQs that talk about moving obligations post 12/31/24. So as long as you meet those conditions, yes, certainly you can do that.
Great. We got a question from the Village of Round Lake Beach, Illinois. For the obligation deadline of December 31st for annual reporters, were we supposed to physically submit a report of obligation through SLFRF similar to the expenditure reporting on December 31st that precisely verified all outstanding funds as obligated?
No, for annual reporters, this April 30th, 2025 report is when you would report your obligations. There was no need to send a separate notice to Treasury. And I know that's been confusing because some emails have been received based on 4/30/24 data. But yeah, this is that reporting milestone when you'd annual reporters would show fully obligated by 12/31/24.
Great. Question from San Juan, Puerto Rico. If we are working on asphalt projects under CDBG Title I, and now with the new administration, the state offers money to the municipality to work on one of those roads that was already scheduled to be paved under CDBG Title I, can we make a change and move that money to another road that is under CDBG Title I category? And can I do the environmental review now?
Again, it gets back to the original obligation. So it's really not project specific. So if that other road project was obligated by 12/31/24, that's the key thing. Whether you need to go back and check some boxes with some federal flow down requirements, like do the environmental review now, that's great. But as far as moving from one project to another, it really all hinges on the obligation of that project.
Great. And just going back to some of the questions we had around being able to change reports. We got a question from Phoenix. Treasury had stated it would add new functionalities after the Q4 24 project and expenditure report that was due January 31st, 2025. To enable recipients to add and reclassify funds to projects for which an obligation was incurred by December 31st, 2024. The tool is not available in the report as of today. is there not going to be a tool to reclassify projects?
I'm not sure on a specific tool. The functionality to add new projects is still the same button that we've been using historically. It's the add new project button in the project overview tab, and the I guess the new functionality, and it was referenced earlier in a question, is the attestation pop-up that comes up when you click on add new project, where Treasury's asking you to attest that the new project that you're going to be reporting has incurred an obligation prior to 12/31/24, and that you have maintained proper documentation that can substantiate it. So I don't think there's going to be any new function outside of that. It's just utilizing that same button that we have used previously, but with this new language that's basically highlighting, hey, we're past the obligation deadline now, so any adjustments that you're going to be making still need to be in compliance with 12/31/24 obligation.
Great. We had a question, sounds like it might be a common issue that folks are having, which is that they open the portal and they can't enter any data. I assume that's a reach out to Treasury issue.
It's a reach out to Treasury issue. It could be one of a couple things. Part of it is non-compliant reporters, so annual reporters who did not submit a 4/30/24 report. There was a big push, sort of a last minute push, to get them to come in and submit their report before, I think it was March 27th, to come into compliance. So that could be one of the items that's going on. The other, as I mentioned at the beginning, there's been a bunch of technical glitches with this rollout. So either way, reach out to Treasury and talk through what's going on.
Great. And I'll just make a last open call. We've gone through all the questions that have been pre-submitted. I believe if you have a question that you submitted that hasn't been fully answered, feel free to raise your hand and we can call on you and you can ask it live. Or if there's anything else folks are looking for clarity on, I think we have about 7 minutes left. And thank you, Matt and Dan and Ryan, for this really helpful guidance. Great. Well, it seems like you guys did such a good job. There's no remaining questions at the moment, but just want to thank you all. We'll be posting the recording of this session to our program website and keeping you all apprised of any updates that we get in the meantime about any changes or updated guidance. And we shared in the chat the links to upcoming webinars that Treasury is going to be hosting. I would highly recommend that if you've been having a hard time getting in touch with Treasury, or you feel like you want to speak directly to them about something, coming to their webinars and submitting something in the chat can be a very helpful way of at least getting someone to notice you right away. And then, as I said, we'll be posting the recording of this to our website and continuing to make resources available. We'll pull up we have a poll now. If you can just fill it out. If you need one-on-one advice, we continue through the E311 program to make time available through our great team of Matt and Ryan and Dan and others to answer specific questions that may take longer than we have in a webinar. So feel free to let us know, and we'll continue to be here for you. And just to let everyone know, on the local infrastructure hub side of the house, since I know many of you also have been attending our local infrastructure hub webinars, we will be announcing soon a webinar on the new Safe Streets and Roads for All notice of funding opportunity that was just posted. So that's due in June. We want to make sure that you're all well prepared to apply for the new funding program for Safe Streets for All. And so I'm going to share in the chat the FY25 Safe Streets and Roads for All NOFO, so you can make sure that you review that. And if you've already applied for Safe Streets funding and haven't gotten it in the past, and you're interested in reapplying, we can help you work through any areas of your applications that may need adjustment to align with the current funding criteria. So on behalf of the U.S. Conference of Mayors, our incredible partners on this initiative, and our wonderful experts, just want to thank you all for coming today. We know that you have very difficult jobs in cities. It's made more difficult as guidance changes, and that's why we want to be here for you and help you decipher how to stay in compliance and keep every dollar that your cities deserve. Thank you.